Hello, I'm California State Controller Betty Yee, and welcome to this episode of our occasional financial readiness series. Today, we will be spending some time delving into the property tax postponement program, and I'm very pleased to have Natalie Sidaris, who's here. And Natalie, welcome. Natalie is the division chief overseeing our local government programs and services division. Welcome.
Thank you. It's great to be here.
Great. So the Property Tax Postponement Program for our audience is a program that provides assistance to those who are eligible, who are seniors, age 62 and over, who are blind or are living with a disability. And it is an opportunity to provide assistance to those homeowners and those with those characteristics who are having challenges meeting their property tax payments. And this was a program that was enacted to provide this particular relief. It was suspended temporarily during the Great Recession, during budgetary constraints. But during that time, our counties also provided voluntary programs. And so we're very happy to see the program reinstated now and actually expand it. So Natalie, do you want to start by maybe just talking about the program itself and the eligibility, the types of properties, and maybe just helping us do a level set there?
Sure. So as the controller already mentioned, there's some eligibility requirements, and there are several. I'll just run through them really quickly, and we can perhaps delve into some of them in more detail a little later. But as the controller said, the Property Tax Postponement Program was reinstated in 2016, and so we have been administering the program again since then. And prior to that, it actually ran from 1978 to 2009. So it's been around a while. It's had some little changes over the years, but to be eligible, of course, you have to be 62 or older, or you can be any age and be a homeowner who has a disability or is blind. And so you also have to meet certain income requirements and equity requirements. So for this year, and the income requirement changes a little bit each year with inflation. This year, the requirement is $45,810. Kind of a funny number, but that's the way the inflation calculation works out. And so you must make that much or less. And so you also must have 40% equity in your property. You cannot have a reverse mortgage currently. And the property must be your principal place of residence. So if you own multiple properties, you've got to mainly be living at the particular property where you wish to postpone the taxes. You can't have delinquent or defaulted taxes if it's a manufactured home. You might be able to participate if you have delinquent or defaulted taxes on a stick-built or real property. That about covers it. I know it's kind of a lot, but those are the main eligibility requirements. And if you are admitted into the program, the controller's office will pay the county for your property taxes on your behalf. We file a lien to secure the taxes paid against the property, but you can remain living in the property and you can make a payment anytime, but you are not required to make a payment until one of these collection triggers. So like you move from the property or sell the property, those kinds of things. And at that time, the account will become due and payable.
That's great, Natalie. And over the course of the years, and maybe just even since the reinstatement of the program, how has the program done? What are you seeing in terms of interest in the program?
It has steadily increased a little bit. And, you know, I really think that we have kind of a moment in time right now with the global pandemic, the homelessness crisis, and a lot of people have lost income, of course, in this past year and a half or so. And so I'm hoping to see increased participation in the program, but we have so far postponed, I think in total, goodness, something like about $17 million in taxes since we've been running the program, since it was reinstated. And some people are multiple customers, multiple years. So they're returning and participating year after year. So we have people who have been participating in the program since the old program for like 30 plus years. So it is something that I think helps people remain in their homes. And so with some of the new law changes that of course the controller supported and helped get in place, we have managed to increase that income a little bit, and I think made it more accessible to more people. So I think it's a great program. It's something that's really near and dear to my heart. And so, you know, we take a lot of pride in helping anyone who can be qualified to get, you know, to participate in the program. So.
Yeah, you make a great point, Natalie, and that is given what so many Californians are experiencing today, certainly with the effects of the pandemic, the loss of jobs, and and probably even some displacement from wildfires, right? And so you look at all of that, and where do people go? And this, I think, could be a program that could be significant in terms of being able to keep, our elderly, neighbors, and certainly those who are living with disabilities in their own home. So it's really a wonderful program. The program's been expanded recently. Can you talk about some of the other the types of property that are subject to this program?
Yeah, when the program was first reinstated back about 2014, 2015, and then we started taking apps again in 2016. So one of the changes since then that came in kind of recent years after that was that mobile homes or manufactured homes are now able to participate where they weren't for a while there. So that is one expansion. And I know a lot of folks that have manufactured homes have been, they were chomping at the bit to get that change. And so pleased to see that is now an option for those folks. And so there's that change. Again, I kind of touched on the change to the way that the income is calculated. So
Yes.
for the first few years of the program, the income was static. So every year it did not increase. It was it was quite low. I think it was 35.5 for the first few years of the program. And a couple of years ago, we managed to get some changes in law that allow us to change that income threshold each year. So it's based on a calculation of inflation. And so it went up quite a bit last year from 35.5 to 45 for the previous year. And then now it's at this 45,810. So.
That's good. No, definitely want to capture more people who could benefit from this program. So speak a little bit about the structure of what this postponement looks like. So it sounds like it's structured a little bit like a loan because there is interest that is charged on this. You talked about the lien that is placed on the property until such event that that can be removed. But I think oftentimes when people hear about liens being placed on property, it usually signals that there's a problem or some sort of some other event that triggers that. But maybe talk a little bit about once someone is approved for the program, then what's the structure of that look like?
Sure. And so once someone has been approved, and I'll just mention that it typically takes us something like about 6 to 8 weeks to get a response out. And so folks should always be very careful to go ahead and pay their taxes in the meantime until they hear from us, just to avoid any penalties or interest that would accrue. And then they should get a refund from the tax collector if we do admit them into the program and make a payment on their behalf. So we admit folks to the program if they're approved, if they're eligible, and then we do go ahead and make this payment for whatever their property tax amount is. We cannot pay defaulted taxes, but we can pay your current taxes. And sometimes that gives people an opportunity to start working on those back taxes.
To address their back taxes.
Exactly.
Yeah. Uh-huh.
And so, so we make that payment, and at that time we do record a lien, which you're right, it does kind of put people off sometimes when they hear that, but it really is just to secure that eventual repayment. So it doesn't mean that you have to make a payment now, although you can if you want. There's no penalty for early repayments. But basically we record that lien, and anyone, if you've been through the process of buying or selling a house, that there's a title search, and they look at the liens against the property, and at that time they would just come out of the proceeds of the sale. So we never foreclose on a property or take title to the property. We're just recording that lien to eventually secure a repayment whenever that time comes. And I will just briefly mention, I know a lot of people have something set up with a lender if they have a mortgage, where they
Yes.
are paying into like an escrow account, and
Right.
so or impound account. And so if you do have that, it's kind of the same thing like I mentioned earlier. If you pay the county for your taxes and then you later are admitted to the program and we also make a payment, under state law, the county will refund the overpayment to you, the taxpayer or the homeowner.
Excellent. Good, good. And this is something where the eligible person, once approved for the program, has to apply every year. Yes, to be approved
That's
every year.
correct.
Okay.
Yeah, that's correct. Now, we have a lot of people, like I mentioned, that have participated year after year. And some people kind of go in and out of the program. And some people are like a 1 year and done kind of situation. And so whatever, works and is the most benefit to that person. Now, you do have to prove up eligibility each year, but there are some things, of course, if you've told us how old you are, we can pretty much guess how old you are the next year.
Yep.
Some of the documentation you don't have to resubmit every year, but there are some things that we do have to have documentation and verify each year, like income, equity in the property, if there's been any amendments to like a trust, if the property is held in trust, those kinds of things.
Okay, good, very good. Now, I know that when there are programs like this, and particularly when they serve a particular population, oftentimes we will see third parties try to get involved in terms of helping to find those who might be eligible. Have you seen any kind of a cottage industry arise in terms of trying to locate eligible applicants for this program and charging a fee for that? I mean, because there is no fee to apply for this program.
Nothing that we've heard about. You're exactly right. There is no fee to apply for this program, and we are very dedicated to helping anyone who needs some assistance with gathering the documentation that's needed. So I really encourage anyone that hears about something like that, to call our 1-800 line first or shoot us an email, because we will be more than happy to walk you through the whole application. We do that all the time. And so I haven't heard about a lot of sort of industries like that. We've had a few instances of kind of fraudulent things that we've identified, and we have a lot of, measures in place and tools and safeguards at our disposal to try and root those things out. Our number one priority is to kind of protect this limited funding and make sure that it only goes to people who are truly eligible and truly in need. So we're pretty diligent in trying to, root things like that out. So I haven't really heard of like an industry around that. We have had a few like individual instances where someone tried to apply maybe in like a deceased person's name or things like that. So we have some pretty good, tricks and tools to safeguard against those kinds of things.
Yeah, and I think you raise a good point, and maybe this is a good time just to offer some tips about the type of documentation that would be required to apply for the program and to determine eligibility for you and your team to determine eligibility, and then how to best safeguard that information, because we know that when we look at issues of identity theft and just scams, and particularly scams that unfortunately prey on our the seniors in our communities and those who are vulnerable. So maybe talk a little bit about the type of documentation. Obviously, some of this has a lot of personal information, but that might be helpful in terms of just limiting kind of the exposure if our potential applicants know what's expected.
Yeah, that's right. And that's a really good point that, I have to admit that, people might look at our application and think it's it's asking for a good bit of documentation, and it is, and that is because we are, like I said, very diligent about making sure that people we admit to the program are truly eligible, and we're not giving this money out to folks who aren't really in need and don't meet the requirements. So I will just say, if anyone is considering applying and looks at the application and you feel a little bit overwhelmed, don't be deterred. Give us a call, and like I said, we are always happy to help you figure out what documentation might work. If you don't have something, it lists a lot of examples in the application, and if you don't have one of those, we will try to work with you and help you get something that will work. And so I'll just kind of run through some of the documentation requirements, just to kind of hit the high points. And these basically break out along those eligibility requirements like age and equity that I talked about earlier. So age is pretty easy one, because something just like a government issued ID that's current, not expired, will work. So that could be a driver's license or a state issued ID card, or a passport is fine. So we just need a photocopy of one of those kinds of documents. To prove up disability or blindness, most often what we probably get is a Medicare card or Social Security award letter, which would state that you receive Social Security due to a disability. And so that'll work. And if you don't have that, there are some other possibilities, like a letter from your doctor that's recent, and on letterhead, those kinds of things. So if you're not sure, give us a call, and we'll help you figure that out. We do need your county tax bill, and sometimes folks they haven't received that from the county by the time that they're turning in the application. Some counties don't send it out until maybe late October. And of course, we start taking applications October 1st. And you do want to get it in as soon as possible. So if you don't have your county tax bill yet, go ahead and send it in. Go ahead and send your application in, and we can usually get that information from the county a little later. And then we also need to prove up ownership. So this is usually done with the most recent deed for the property. There are some other circumstances, like if you have multiple owners, we need consent from all the owners. So there might be some individual circumstances like that, or if your property is in a cooperative housing corporation. So there's some detail about that in the application materials. And, would just encourage anyone in that situation to give us a call. And if you have a manufactured home, we also need the registration card or the certificate of title. The next requirement is equity. And so this is usually done by just looking at all the debts against the property. So any liens, abstracts of judgment, equity line of credit, those kinds of things. We'll look at those, and we have some tools at our disposal to do some title searches. And we also work with the counties and get data from there. And so we'll just be looking at the debts against the property versus the value of the property, and making an equity calculation on that. And finally, of course, income. So the most obvious would be just your last tax return. So if you're applying this October, your income is based on your 2020 calendar year income. So your income as of December 31st, 2020 is what we would base eligibility on this coming October and this coming filing period. And so if you don't file a tax return, there are other things we've used as documentation. It might be a statement from the Social Security Administration, pension statements, VA benefits, those kinds of things. And then just finally, occupancy is the last one. We don't really require anything from you up front on that. We will do some verification of that on our end. And then if there's any questions or issues that come up, we'll be in contact with you. And, if we need additional documentation like utility bills or something, we can request them at that time.
So that's on the principal place of residence.
That's correct. Yeah. Okay. So if we find that maybe mail is being received at different addresses,
right,
then we might need a little bit more documentation to show that this property where you wish to postpone those taxes is truly your main residence.
Great. Great, thank you. So definitely a little bit of paperwork, but we want to be sure that we are providing the benefit to the appropriate applicant, to the right applicant. And I think it's safe to say with any of these documents that Natalie just mentioned, any personal confidential information, private information, always safeguard that information. We know that, particularly during tax time, particularly during deadline periods for major programs, there's a lot of private information that gets exchanged, whether it's social security numbers, certainly driver's license numbers and the like. So thank you for running through those documents, Natalie. I think at this time, let me just check to see if there are any questions from our audience.
Good morning, Controller Yi. Good morning, Natalie. We did have a question that came in from a constituent that would love for y'all to clarify. So if you are a recipient of the program, how much interest do you have to pay when you're getting ready to sell your home?
Great question. And I was just thinking, I hadn't talked about the interest yet. So thank you for the person that asked that. So the interest rate for everyone, for all accounts, is 5% per year. And I want to be really clear that that's simple interest, because I know I tend to think about compounded interest, and I think that's what a lot of people think about. But this is not. It's a little better than compound interest, simple interest. So I like to give an example just to make it a little more relatable. So say that your tax bill is about $2,500. The 5% interest would amount to about $125 per year, or about $10.42 per month. So that's about how that works out. And so, again, you do not have to pay that immediately. So that just will accrue. And again, the entire balance of the account, so the initial postponed tax amount plus any interest that has accrued by the time that the property changes hands, that would be your balance due. So it's simple interest, which I think is better than people initially think, but there is some interest, and it just comes out of the proceeds of the sale eventually, whenever the property changes hands.
Great, thank you, Natalie.
We do have another question. Thank you. So the next question is, it's a two-parter actually. So when will the applications be available for this year's program? And will you be sending applications to those already enrolled into the program?
Yes, good questions again. So actually tomorrow, our application for this upcoming filing period is being released, and it's available on our website, or you can call us, which we're going to have our contact information up at the end of this presentation. So we have a 1-800 line, and we have an email box, and you can contact us if you would like us to mail a paper application to you. It's also, again, available on the controller's website. And yes, we do send applications to our current participants. So if you were someone who participated this past year, you should also receive an application. And one other point I think that I didn't really touch on, I just want to mention, is that each year the filing period runs from October 1st until February 10th. We do really encourage people to get their applications in early, because there is limited funding for the program, and it's done on a first come, first served basis. So you want to get your application in and get in line, and have the best shot at getting funding.
Great, thank you. Thank you. So Natalie, I had one other question, and that is, there's nothing that prevents someone who has been approved for the program to actually pay all or part of the balance before they even sell the property, right? Or
that's right.
Before they give up ownership of the property. Okay.
That's right. You can make a payment anytime in any amount that you would like to. And, we do have folks that try to kind of keep up on the interest payments, and they might do like a payment a few times a year and just try to knock out some of that interest that's accruing. There's absolutely no penalty, and, any amount that you are able to pay and you wish to pay, you can. But I also want to be clear that you don't have to. So that's really the kind of the benefit of the program, is that you can stay there in your house and until you're ready to sell or move on. And, the balance, none of the balance is due until that time. But again, no penalty at all for early repayments.
That's great. It's terrific. Thank you. And so what can our program participants expect from the state controller's office? Do we send them statements on a regular basis? How will they know to track their interaction with us?
Yeah, great question. So basically, when you first submit an application, pretty quickly after that, you will just get an acknowledgement letter just saying, hey, we got your application and we're reviewing it. And it also has an account number. So if you need to call us and ask a question or something, you can reference that account number and it'll help us find your file. We go ahead and we go through our review process, which I think I touched on is about usually 6 to 8 weeks. Occasionally there's some, if we're missing some documentation that we need to request, we'll come back to you and send you a letter and request that. And so that may take a little time for the mail and for you to gather that information and send it in. But usually our decision is issued in about 6 to 8 weeks, depending on our current volume of apps. And then we send you a letter letting you know the decision. There is also an appeal process if someone believes that, we got it wrong, or something was missing, or you have additional documentation that you think might change the decision. And at that time, usually within a month or so, we issue payment on your behalf to the county, and your taxes are paid. And like I said, if your lender had paid through an impound account, they should then, the county then should issue a refund to you. We do send an account statement once per year to everyone who's currently in the program. And it just says, hey, here's your current balance. And it's not a bill. We're not asking you to pay. It's just sort of letting you know, just giving you that annual statement. And then I will just add that if anybody needs a account statement at any time, they can always call and request one, and we'll do one up for them. I will say mobile homes are slightly different in that we file a security agreement rather than a lien, and that's filed with the State Department of Housing and Community Development, and that's how we secure repayment rather than the typical lien that's filed with the county. So.
Great, thank you. So Natalie, you and your team have seen this program year after year. Any observations with respect to where many of our approved applicants are from throughout the state, or is it pretty evenly distributed in terms of who is participating in the program?
That's a great question. It's, for the most part, it's fairly evenly distributed. I will say that, there are some counties that seem to have more participation and some counties that seem to have less. And, that may just be there's less people in some of those counties. Some of the more rural counties have had pretty low participation. So we do try to work with the counties in those areas to try and help, spread the word out there. Yeah. But overall, I think, it's fairly even. There are 1 or 2 counties where it's been a little low. So I don't really know the reasons for that. But I think that, as word gets out about the program, it's still, since it's been reinstated, it's still kind of relatively new. So I'm really pleased to do things like this that I think help get the word out a little bit.
Well, good. I'm glad we're having this conversation, just giving our audience and the public a little bit more information about the benefits of this program. And I thought what I'd do is just ask you, kind of in conclusion, you and your team also hear about specific kinds of circumstances or people that are experiencing. And obviously, these are anecdotes that come into us, but whenever we hear them, and they are approved for the program, it must be just very rewarding to know that we are lifting a little bit of a burden off of people's shoulders. But maybe just give us a flavor, because I don't want people to feel like there's no shame attached to this program. We're here to help, and it is a benefit. But maybe just talk about some of the circumstances you've heard from some of the program applicants.
Absolutely. I have found this program to be very rewarding, and I was kind of part of the initial team that got the program stood up again when it came back. And so, like I said, it's kind of near and dear to my heart for that reason. And so, yeah, we have gotten just some amazing, thank you letters and comments. As I mentioned, our staff, I'm really proud of them because they're always willing to just sit on the phone and walk through every part of that application with somebody. We do that all the time, and they just receive some of the nicest notes and the nicest, what a difference the program has made in their lives. And so for people on a fixed income, or who are struggling for other, reasons, it really can help someone in need hold on to what is usually their single greatest asset, possibly their only asset.
Yes.
Stay in their home. And, if you have a disability, you may have set up that home to work for you. And it really, is just very uplifting to hear some of those stories that they were able to stay in their home, they were able to stay independent, and hold on to their property, which again is probably their greatest asset. So
Absolutely. Thank
it's
you.
been a wonderful, rewarding experience.
Well, really kudos to you and your team. And as we have said during this time together, we're here to help, and we hope to hear from more Californians who believe they can benefit from this program. I'm going to turn to Matthew again. I think there may be more questions in the chat. Matthew?
Yes, thank you. I do have one more question. So on a mobile home, what if you do not have a title or registration? Will you be able to qualify for the program?
Well, I think that we do need to see proof of those. So what I would suggest probably for that commenter, if you would give us a call on our 800 line and let us maybe kind of talk to you and see what the circumstances are, and see if there's some way that we can prove it up. Sometimes we can work with HCD and get old records or something. So if there's a way that we can help you get that documentation, we'll be happy to do that. So if that commenter can give us a call, we'll see what we can do.
Excellent. Thank you very much, Natalie. Any other questions in the chat, Matthew?
No, seeing none. Thank you so much.
Thank you. Thank you. Well, thank you, Natalie, for spending this time. I'm always happy to just help push the word out about programs and can be so helpful and so significant in people's lives, especially during this time, as you mentioned at the outset, with everything that's been happening with the pandemic, a lot of displacement, people losing jobs, just wildfires and just a lot of challenges in people's lives. I think, and really thank you and your team for your patience and just working through all of these issues about eligibility that we hope are not going to be barriers to getting more people into the program. So really appreciate your time today.
Thank you so much.
And what we will do now is we will put up information about the program. Please get in touch with us. This is the Property Tax Postponement Program in the California State Controller's Office, and really appreciate everyone listening today. Thank you very much and have a good day.